Very good afternoon, all of you. Hope you all are doing good. May God bless you all. Welcome to Commerce first year class. Since last 2 days, we are learning the theory answers, which forms the first part of your Commerce 1 paper. We have done LAQs last 2 days, and today we move forward with some SAQs and VSAQs. Okay. Now let us take this short answer questions. And very frequently asked question here is, what is business and what are its features? What is business? What are its characteristics? Very, very important. Define business and explain its characteristics. Now, business is a state of being busy. You are busy with something, then you are said that you are doing some business. But then it has to have some economic benefits. Okay, it has to have some economic benefits. That is a correct factor when we call it as a business. Okay, so there is a definition given by Hane, L.H. Hane. What is business? Defined as any human activity directed towards producing or acquiring wealth through buying and selling of goods. Very important and very short. Learn this definition, please. What is a business? As per L.H. Hane, business can be defined as a human activity directed towards producing or acquiring wealth through buying and selling of goods. Isn't it? So, as I told you, business, if I am simply busy reading, then I cannot be said that it cannot be said that I'm doing a business. I can call, or you can call, or anybody can call it as a business only if there is an economic benefit out of that. It has to be an economic activity, not a social activity. I go to a religious place and worship there. I am busy with that. Will I be said that I am doing a business? Answer is no, because I am not having any economic benefit out of that. So to call an activity business, there has to be some economic benefit out of that activity. Okay. So here it is said that it is producing or acquiring wealth through buying and selling of goods or services. Okay, goods or services. Now let us see what are the characteristics, or sometimes we'll give the term features. What are the features of business? The first one is creation of utility. Now, what does this word utility means? Utility is the power of any commodity to satisfy human wants. Like suppose I want to write. I want to write. Will this pencil help me, or will this pen help me? Yes. Then I say that pen is having utility because it is satisfying some want of a person, isn't it? Suppose there is a piece of paper, okay, a piece of paper, and I want it is thrown in the dustbin. It is thrown in the garbage bin. I want to write something on that paper. Will I take that paper and write? No. So it is of no use when I want to write. So I say that paper is not having any use for me, or paper is having no utility for me. So what is utility? It is the want satisfying power of a commodity. If I want to eat, I'll eat apple. That apple is having utility because it is satisfying my hunger. If I'm feeling hungry, I'll eat 2 slices of bread. Then I say that bread is having utility. It is satisfying my hunger. So utility is the power with which it satisfies some want. Okay, so what does business do? Business will create utility in the commodities. Business makes goods more useful to satisfy human wants. It adds time, place, form, and possession utility to various goods. Okay, what will business do? Like I'll give example. Suppose there is a product in manufactured somewhere in, let us say, Kashmir. There is a commodity, there is a product manufactured in Kashmir. Let us say Kashmiri shawls are there, sweaters are there. They have a huge demand in South India, or let us say in Hyderabad, they have a huge demand, right? So these Kashmiri shawls will have utility only if they are brought to this market, the market of Hyderabad, isn't it? So how it is done? It is done by business. It is done by business. So it takes care of, you underline this, time, place, form, possession, utility. I gave the example of place utility. From Kashmir, they came all the way from Kashmir, transported to Hyderabad. So place utility is created. Suppose there is a raw material, there is wood. We want a chair. That wood is converted into chair. So that is form utility. We have changed the form, right? Like this. So what does business do? It creates utility. And what types of utility? Time utility, place utility, form utility, possession utility to various types of goods. Okay. So that's it. The second one is business deals with goods and services. Again, this is a very important characteristic. Basically, in the definition also, we see this. What is business? It is buying and selling of goods or services. It is exchange of goods or services, isn't it? So, what does basically business do? It deals in goods and services. And goods are classified into two types. Goods are of two different types. One is consumer good, the other one is capital goods, or they are called as producer goods. One is consumer goods, the other one is producer good. Now, what is the example of consumer good? See, you are feeling hungry, you eat a bread. That is a consumer good. It is directly satisfying your want, isn't it? You are feeling hungry, you eat an apple. Apple is a consumer good. That is directly satisfying your want. You want to write, you take a pen or a pencil. A pen or pencil is called as a consumer good because it is directly satisfying your want. But there are one more type of goods which indirectly satisfy your want. Like say, for example, we have an oven. I said when I feel hungry, I ate a bread, a loaf of bread or a slice of bread. Okay, so bread is a consumer good. But where is that bread? Where do we manufacture or produce that bread? It is done in an oven. So oven is a producer good or oven is a capital good like that. Example I can give very other example. Any machinery which produces something, any machinery that produces some other goods, that machinery is called as a producer good. So producer goods also satisfy human want, but not directly, indirectly, right? They bread, consumer good, oven, producer good. We bake the bread in a oven, maybe small or big. We bake the bread in a oven. So bread is a consumer good and oven is a producer good. Okay. Then next, the third characteristics is there has to be continuity in dealings. Suppose, suppose I'll give one example. There is Mr. Rao, Mr. Alpha. There was this Mr. Alpha. He was having a scooter. He used it for 10 years. After 10 years, he sold that scooter or he sold his bike and he made some profit. He sold his bike and he made some profit. Can we say that Mr. X is doing a business of selling bikes or scooter like this? No. Why? Because there is only one transaction. There is only one dealing. If he does it again and again, again and again, then only we call it as his business, right? This is once in a blue moon. If you are indulging in any activity, that cannot be called as your business, isn't it? So to call it as a business, to call it as a business, there has to be continuity in dealing. Okay, he should be doing the same Think again and again. Like what is given, for instance, if a person sells his old car, it is not business, though seller gets good money in exchange. But if he opens a shops and sells cars regularly, so here Mr. Alpha is selling scooters or bikes regularly by opening a showroom, then we can say that Mr. Alpha is doing business. So there has to be a continuity in dealing. If you do a business once in a blue moon or once in a while, we cannot call it as his business. Okay. Then the next one is sale, transfer, or exchange. Very important character again. There has to be an activity of sale, or there has to be an activity of transfer, or there has to be an activity of exchange to call that particular activity as business. Sale means buyer and seller. Transfer means again moving from one person to another. But let us say, see, seller, let us say if I need a pen, I go to stationery, I pay 20 rupees, I buy a pen. This is a business for the stationer. Okay, there is a transaction of sale, we call it here. There is two parties. There are two parties. One is the seller, the other one is the buyer. But suppose there is a transfer. Suppose there is a transfer. Like what transfer? Suppose I have a computer. There is somebody who wanted to use it. He wanted to use it. I gave it on rent to that party. Right? So here there is a transfer. There is a transfer of possession, but the ownership is not transferred. So even this can be called as business. And there is exchange. Exchange of goods for goods, you have learned, no? Barter system. Even that can be called as business. So there can be either a sale transaction or a transfer or an exchange to call it as a business. Okay. All the business activities involve what? Transfer or exchange of goods and services for some consideration. If I am giving it free of cost, it is not called as business. There has to be a consideration in return. Like even in barter system, I said, no, I gave one bag of rice and took one bag of wheat. I gave bag and took consideration as wheat. So there is a consideration. So this activity also can be called as business. So basically, if there is a sale, transfer or exchange, okay, if any activity of sale, transfer or exchange of goods or services takes place, that is called as business. Next, profit motive. Very important. Again, this can be asked for 2 marks. What is profit motive? It can be asked for 2 marks. Now, what is profit motive? See, the very basic thing I told you, to call any activity as business, it should be an economic activity first. It should be what activity? Economic activity. We cannot call social activity as business. I am giving charity. Suppose I am supplying food packets in an area where there is drought or flood situation is there. I go and supply food packets free of cost. Is it called business? No, because it is not an economic activity. It is a social activity. But suppose if I go and sell food packets and I am taking consideration, I am taking money in return. Is it business? Yes, it is business. So basically, to call any activity as business, there has to be a economic outcome. There has to be an economic benefit. Here, whoever is starting business, tell me with what intention does he start the business? Does he want to do the business for charity? He want to give goods free of cost, or he want to sell it? Obviously, he want to sell it. He wants to earn profits. So profit making is one of the important aspects of any business. If business is done for charity, I mean, basically it cannot be called as business only, because charity, there is no consideration. So profit motive is one of the important activity. But one thing is very important. Those profits should be earned through fair means, through legal means. You should not cheat the customer and try to earn more profits. That is unethical. That is not business done. You are buying something for 1 rupee and selling it for 100 rupees. Tell me, is it ethical? It is not. Moreover, it's not legal also. It's not illegal also. So profit, though, is an integral part of every business. Profit is a must for every business, but then the profit should be earned legally and by fair means. Okay. So business should never exploit society to make money, because business exists in the society only. You have any shop. Where is the shop? It is existent in the society only. And who are the buyers? The people living in the society only. So when you are earning from the society, do not cheat the society. Do not cheat the people in the society. That is how your profit should be earned. Not just because you want to earn more and more profits, you are cheating people, unethical. Next is risk and uncertainty. Risk and uncertainty. Every business, this is very, very important aspect or feature of any business. Every business involves risk and uncertainty. You will not find a single business without risk, without uncertainty. You never know, no? See, the best example we can give, 2 years back when pandemic was there, when Corona was existent. Tell me, most of the shops or business were closed for 2 to 3 months. They were totally shut down for 2 to 3 months or 6 months also. So this is an example of uncertainty. This is an example of risk. We do plan so much, but we never know what is going to happen tomorrow because tomorrow is uncertain. The same way in any business, risk is uncertain. Risk and uncertainty is there. So what does businessmen do? They will act very prudently to cover that risk, to come over that uncertainty. The businessman will take insurance policy. Okay, this you'll learn in your second year, insurance contracts and all that. But then insurance is economic activity that will help overcome the risk and uncertainty. Okay. Next is economic activity. This I told you in the beginning only because if anything is done for social reasons, we cannot call it as business. It should be done with the intention of earning money. Then only we call it as a business. Okay. So these are few very, again, 90%, yeah, 95% chances are there that you would get this question in your advanced supplementary, and very easy also. Please go through this once. Okay. We'll take one more question. Yeah. This also I'm expecting this time. What are the features of LLP, Limited Liability Partnership? We have learned about partnership, no? Partnership where minimum 2 members, maximum 50 members, Partnership Act 1932. Okay, this is the new form of business organization, very much expected in for a short answer question. Limited liability partnership. If you remember, while telling you partnership, I told you a partnership is having unlimited liability. A partnership is having unlimited liability. The liability of partners is unlimited. That is a big disadvantage of it. And there is a limitation that you can take only 50 members as the partners. So to overcome these two shortcomings, what two? One is unlimited liability. The other one was limitation on the maximum member. To overcome these two disadvantages, a new form of business organization came into existence, which is called as limited liability partnership. I can say that this is having some few features of partnership and some features of a company. A limited liability partnership is a combination of partnership and company, I can say. Okay. So again, I am expecting this for 5 marks in the advanced supplementary. So let us discuss this. So as the word itself says, what is the first feature? Limited liability. Here, the liability of partner. Now, here we need minimum 2 members and maximum you can have any members in case of limited liability partnership. LLP may you can have minimum 2, maximum you can have any number. So maximum you can have any member is a feature of a company, no? Unlimited members. So as I said, it is a combination of both partnership and a company. Some features are like partnership, some features are like company, right? The first one is limited liability. Unlike partnership, Here, the liability of each partner is limited. It is limited to the share in the business. Whatever amount he has invested, let us say there are three partners in LLP. There are three partners in LLP. R, and R. RRR. There are three partners in a LLP. Suppose R1, R2, R3. R1 has invested 5 lakhs. R2 has invested 8 lakhs. R3 has invested 3 lakhs. Right? So if the business does not run, if the business incurs huge losses, if it is a case of partnership, then these partners are expected to invest more amount to clear the debts. But in case of LLP, they don't have to invest any further amount. They don't have to invest any further amount. The maximum loss of R1 would be 5 lakhs, R2 would be 8 lakhs, and R3 would be 3 lakhs only. So the liability is limited to the share held by them in the business, isn't it? That is one. Second one, separate legal entity. Yesterday, while discussing joint stock company, I told you a company is having a separate entity. Does a partnership has legal entity? No. Does a proprietary firm has separate legal entity? No. But as LLP is having a separate legal entity. So again, I am repeating, I said LLP is a combination of partnership and company. Some features of partnership, some features of a company. So this feature is taken from a company. A company is having a separate legal entity, no? In the same manner, a LLP is also having a separate legal entity. That is, a LLP can enter into contract with anybody. It can sue somebody or it can be sued by somebody, right? That is it. So registration can be done in the name of LLP. It can enter into a agreement with external parties on behalf of the business, just like a joint stock company. Number of partners. I told you in the beginning, what is the minimum number of partners you can have in a LLP? 2. There is no limit on the maximum number of partners required in LLP. It is mandatory that at least one person should be a resident of India. Okay, he should be a resident of India. See, well, we don't need an elaboration on this point, but resident and citizenship are different. Residential status and citizenship are two different things. When I said resident, I don't mean citizenship. Citizenship is different, resident is different, but we don't need an elaboration on this point. For you, it is enough to know that he should be a resident of India. Okay, so to be a partner, at least one member should be a resident of India in case of a LLP. Then perpetual succession. Perpetual, I told you yesterday, perpetual means permanent, continuous. Just like a joint stock company, a joint stock company is also having perpetual succession, no? Members may come and go, but the company continues to exist. Company will not be winded up because some few shareholders die. Okay, a company cannot be winded up or liquidated because some shareholders died. No, a company continues to exist in spite of members coming and going. In the same manner, a LLP also continues to exist in spite of its member coming and going. The operations will not be affected even if the partners become insane or insolvent or if they retire. Okay. So it is a feature of a company, we can say. Next, mutual rights and duties of the partners. What are the rights and duties of partners? Just like in case of partnership, we have the rights and duties of partners. No, here also mutual rights and duties of partners are defined. There should be an agreement between the partners. There should be an agreement between the partners or between, like if you remember, when I told you one of the essential elements of a partnership firm, there has to be an agreement. Okay. If it is a partnership firm, there has to be an agreement between partners. That agreement can be either oral or written, I said. So in case of LLP also, there should be an agreement between partners or between the partners and LLP. That is must. Okay. Then lastly, liability for unauthorized act of one partner. In case of partnership firm, if one partner commits something, it is applicable on all the other partners. Okay, that is a mutual agency, we say. One partner represents the firm. A partner is both a principal and an agent, we say. So if one of the partners makes some commitment on behalf of the firm, then every partner is obligated. Every partner has to honor that commitment made by one partner. But here it is not the case. If one partner makes some false commitment, the rest of the partners are not liable for that. Okay, so there is no mutual agency, we can say, in case of a LLP. A partner will not be held liable for the unauthorized or independent act of other co-partners. But then, in case of partnership, it is applicable. Mutual agency is applicable in case of a partnership firm. If the partner makes some commitment, even if it is a false commitment, then it is an obligation on the part of other partners, which is not in case of LLP. Okay, so go through once. Okay, now let us go to the next question. See what is the next question. This is LLP. Again, this also. What are the functions of a promoter? What are the functions of a promoter? First of all, you'll get this question for 2 marks. Who is a promoter? Who is a promoter? Right? Promoter, see, when does a company comes into existence? After getting the certificate of incorporation, a company is said to be formed. कंपनी एग्जिस्टेंस में कब आती? सर्टिफिकेट ऑफ इनकॉर्पोरेशन इशू होने के बाद आती. सर्टिफिकेट ऑफ इनकॉर्पोरेशन कौन इशू करता? आरएसयू विल इशू. आरएसयू कैसे इशू करता? There will be few people who will submit certain documents which we discussed yesterday. Okay, ROC will get a request from a group of people or from some persons submitting certain documents like memorandum of association, article of association. Several documents are submitted to ROC for the formation of company. Those people who submit those documents, they are the promoters. Okay, they are the promoters. After the promoters submit the documents and pay the fees, ROC will issue certificate of incorporation. The company will come into existence. Let us say X Limited company is formed. X Limited company will issue shares to the public. They become shareholders. Shareholders are the owners of the company. These are the subsequent things. But the first thing is, who are the people who are the one who actually scratch this? Who are the people who get the idea of starting a company? Who are the people who conceive the idea of starting a business by forming a company? Those people are called as promoters. So promoters are the persons who conceive the idea of starting a company to do some business, right? So a promoter is one who undertakes to form a company. He is instrumental in bringing a company into existence. Promoters may be individual, a firm. We have different types of promoters. Okay, we have different types of promoters: individual promoters, institutional promoters, accidental promoters. Okay, like this, we have different types of promoters. So, promoter may be an individual, a firm, an association of person, or a company. Okay, now let us see what are the functions. See, such a short question, answer, and you can back 5 marks. Only 5 functions are given. What does a promoter do? First of all, who is a promoter? Promoter is a person who conceives the idea of starting a business and submit the documents and required fees to ROC and get the certificate of incorporation. Simple. What are the functions? What all I told are covered here. See, a promoter conceives an idea for setting up a business. He is the one who actually gets this idea of starting a business, for which he will approach ROC with the required documents and fees. A person or a group of persons. Second, He makes preliminary investigation and ensures the future prospects of the business. See, if I want to start a business by investing some lakhs and crores of rupees, is it not wise on my part to do a primary level of investigation whether this particular product will survive in the market or not? I definitely have to know. I definitely have to. See, even if you are buying 1 kg of mango, we check whether the mango is good or rotten. Okay, when we are paying just 80 rupees, we check once or twice to see whether the mango is good or rotten, isn't it? So when we are investing and starting a business, is it not advisable or wise on our part to check the profitability or to check the viability of that product or in that market? Suppose already there is a area with 10,000 people. I'll give you example. There is an area with 10,000 people and there are already 10 shops, footwear shops, 10 footwear shops. Then it is not advisable to enter into that market. A population with 10,000 already having 10 shops catering to the need of them, what is the good way? It would not be a wise decision to enter into that market. So this sort of primary investigation has to be done, or you have to come with something very different. If still you want to enter into that market as a 11th player, then your commodity, your product should be of a very different this thing. There should be some unique selling point in your product, then only you can exist in that market. So this sort of investigation is done by promoter, whether the business will flourish or they will incur losses. That investigation is done by promoter. Next, he brings together various individuals who agree to associate with him. See, when you want to form a company, a single person cannot do no. So some voluntary, it's a voluntary association of like-minded people. Then promoters will get all the people who are interested or whose thinking is of the same on the same wavelength as him. Okay, so and he arranges for the resources also. Next, he prepares various documents required. I told you what documents are required: memorandum of association, articles of association, prospectus. These are the required documents to be submitted to ROC. And lastly, promoter raises the required finance and gets the company going. Because without finance, you cannot expect the business to continue or start at least. To start also, we need finance. Finance is called as the lifeblood of business. Okay, finance is like oxygen for humans. We need oxygen. Without oxygen, we don't respire and survive. In the same manner, every business, be it small or big, requires finance for its, startup, existence, survival, and expansion. For all these purposes, we need finance. Right? So easy question. You don't think that it is such a short question. Will you be getting 5 marks for that? There is nothing else you can write in this. This is the maximum content you can write. So please don't think that the size of question matters here. There are 5 points. You write 5 points, you'll back 5 marks. Okay. Then one more economic. Now see this one. Objectives of a business. Okay. Objectives of a business. Objectives of a business are classified into two: social objective and economic objective. Objectives of a business are classified into two: economic and social. Economic means related to money. Social means doing charity to the society, because we are earning from the society, we should do some good to the society. This is the intention behind having these social objectives. So economic means in return money, social means no money, it is only for good of the, it's only in the interest of the society. So what are the economic objectives and social objectives? Of economic activity objectives, the first one is earning profits. Earning, like while telling you the characteristics of business, I told you. With what intention any business is started? Any business is started with the intention of earning money. So that is the first economic objective of any business to earn more and more profits. But then, as I said, profit should not be illegal. Profit should be earned by legal and fair means. Okay. Second one is creating a customer. Creating a customer. A businessman can earn profits only when there are enough customers to buy and pay for these goods and services. No, see, when can he earn profits? Only if sales are made, or let us say from the other point, only if purchases are made by the customer. So they create new customers to their product by innovation, by applying new strategies in the business. They create new customers. They satisfy the existing customers. At the same time, they strive to create more and more customers. We see in the mobile market, no, what they do. Are we not getting new models every month? Every month we get a upgradation of models. I am already having a mobile. If any new features, any enhanced features are there, what I will do, I will sell this one and again buy new model. So what the companies are doing, they are satisfying the existing customers. At the same time, they are creating new customers from the existing customers only. I already am a customer of some brand, let us say, but then since the features of the new product, new model are good, I am going with the new model. So I am a customer. Again, I am becoming a customer. I am a customer of that company. And again, I myself am becoming a customer of that company. So they are creating customers, getting innovative ideas. They are creating new customers. That is one. Then innovation. I told this point here only. Innovation is, if any business want to survive in the market, it has to be innovative. With the old conventional traditional methods, nobody can survive in the market. That is the reason we get new models in mobile industry. Okay, so to survive, they have to come out with these new innovations. So only 3 points are there. These are the economic benefits. Okay, then what are the social benefits? I told you, see, economic benefit is for self to earn profits. Social benefits are for the society. So how does a business has social responsibility or social objectives? That we will see. If a company or a firm is surviving in a market, earning from the society, then it becomes an obligation. It becomes a social responsibility on the part of that organization or firm to do something, some good for the society. So let us see what is the. Now, what are the social objectives you see? What are the social objectives? Social objectives are supplying desired goods at a reasonable price. See, any business is surviving in the society, so they should not try to cheat the customers in the society. They should earn profits, but by fair means, legal means. So they should try to minimize the profit. They should try to sell the products at a very competitive price, at a cheaper rate, not to cheat the customers. Okay, that is the first social responsibility or first social objective of any business. The second one is fair remuneration to the employees. Whoever is working in the organization, those people also come from the society only, no? They come from the society only. So as a part of good deed towards the society, every business tries to pay good remunerations to the employees, at least fair remuneration, let us say. At least an amount where they can survive, where they can look after their family in a good manner. That much salary should be paid to the employees. Next is employment generation. Obviously, this is happening. See, even if I start a small shop, I will have to hire 2 people at least. So that is the social responsibility. Whenever any business is started, they are generating employment. Even if it is a small mobile shop or a tea shop, there at least one small boy will be hired. A person will be hired to serve tea to the customers. So this way, that person who has started the tea stall is self-employed. He is doing on his own, but has created a job for one person who is serving the tea and earning daily wages. So this is a social responsibility of every business to create new jobs to help government by generating employment. Next, social welfare. Whatever, like we see this in case of big industries, big companies, they are doing charity. They are, contributing to hospitals, educational institutions, orphanages, schools, all these, right? So whatever profits we are earning, that amount should be spent, a part of that should be spent for social, cultural, and religious activities. I'll tell you, there is one company in India, that is Tata. They give 65% of their profits as charity. Okay, they take only 35% and the rest 65% they share, they give as charity because they consider it as their social responsibility. So even in the same manner, even if small businessmen are there, as a part of social responsibility, they should come forward for doing charity and good to the society. Okay. The last one is payment of dues to the government. That is, every businessman who owes tax, it should be, those taxes should be paid in time. Okay, because tax is one of the major source of revenue for the government, and with this revenue only, the government will take up the welfare activities in the interest of the society. So taxes or any dues should be paid without manipulating the income by fair means, without hiding your profits. Taxes should be paid fairly. Okay, that is it. Next, we'll take features of LLP we did, functions of promoter we did. Then we have what are the sources of short-term finance. Now, before that, let us see what are the classification of finance. Finance sources of finance are classified into three categories. Okay, what are the sources of short-term finance? Now, I told you, basing on the duration, the sources are classified into three categories. If you require finance for less than 1 year, if your financial requirement is for less than 1 year, then you go for short-term finance. You go for short-term finance. If your requirement is for 1 year to 5 years, between 1 year to 5 years, then we go for medium-term finance. And if it is for more than 5 years, then we go for long-term finance. So the sources of short-term finance are different. The sources of long-term finance are different. And the sources of medium-term finance are different. So the question here is, what are the sources of short-term finance? That is, if any business requires finance for less than 1 year, where they can approach? Where they can approach? That source we are discussing. If the business requires finance for a period of less than 1 year, 1 साल से कम के लिए अगर पैसा चाहिए, तो आप कहाँ अप्रोच करेंगे? That is what we are learning, right? So the main source of short-term finance are as follows: bank credit. Okay, you approach a bank. Any business who requires finance for less than 1 year will approach a bank. So bank extends short-term finance in three different ways. One is loan, second one is cash credit, third one is overdraft. Now, what is loan? I'll give an example, you'll understand. Suppose a business needs a loan of say 5 lakhs or 3 lakhs. What is the difference between loan and cash credit? I am telling you. Suppose on 1st April 2020, I applied for loan and got sanctioned that the same day, let us say 3 lakhs. The loan is sanctioned on the same day, 1st April 2020. But my project started, let us say, on 1st of July 2020. So for these 3 months, this 3 lakh rupees was deposited in the bank only. Okay, so when bank extends loan, they will not give cash to us. They will, open an account in our name and the amount will be deposited in that. So 3 lakhs was there with the bank from 1st of April 2020. My project started on 1st July 2020. So I withdrew the amount of 3 lakhs on 1st July. For the month of April, May, June, 3 months, this amount was there with the bank only. But I have to pay interest from the month of April. Though my amount is there with the bank for April, May, June, still I have to pay interest for the month of April, May, June. This happens in case of a loan. But if it is a cash credit, it is not like that. In case of cash credit, what will happen? Suppose 1st of April, my loan was sanctioned, my CC was sanctioned. I did not use this. I withdrew only on, let us say I withdrew 2 lakhs on 1st July, right? So from 1st July, I will pay interest that too only on 2 lakhs, right? Then after 3 months, I withdrew 1 lakh. Or let us say I deposited some 1 lakh rupees in that. Then again, I'll have to pay interest only on 1 lakh, which I owe to the bank like this. So the basic difference between loan and cash credit we'll see here. Bank loans are provided for a specific short period against some security, some mortgage. The amount of loan depends upon the size and goodwill of the firm. Such advance is credited to a separate loan account and the borrower has to pay interest on the whole amount of loan. But in case of cash credit, it is not like that. It is on the actual amount withdrawn. Like in this case, I told you, no, he withdrew only 2 lakhs. So he has to pay interest only on 2 lakhs. Then overdraft. Overdraft is a short-term facility. Normally, it will not be extended for more than 6 months. Like suppose I am having a balance of 1 lakh in my bank. I am a very good customer of the bank and I had issued a check of 1,12,000 or 1,10,000 to some party. And I forgot to deposit the excess 10,000 and the check came for presenting, for encashing. So the bank manager on his own guarantee can clear this 1,10,000 check. That excess 10,000 what is overdrawn is called as overdraft. So I have to pay interest on this overdraft. Okay, so that is it. Next we have trade credit. Trade credit, this comes out of the trade transaction. Okay, this comes out of the trade transaction. Normally, every party these days, it has become a very important feature of the market that you have to sell goods on credit, right? And give a time period of maximum they give 90 days time period. That is 3 months time period. So suppose A is selling goods to B. Okay, A is selling goods to B worth rupees 1 lakh and is getting 3 months time to pay. So B is availing this. See, B got this 1 lakh rupees and B will sell these goods in the market and only after 3 months B will pay the amount to A. So here for 3 months B has generated a revenue of 1 lakh rupees we can say. So that is what trade credit is. So here A is the creditor and B is the debtor. For A we call it as trade receivable 1 lakh rupees and for B we call it as trade payable. Okay. And the last one is installment. We see this mostly in case of electronic goods, white goods we see. We go to the shop, we purchase it and pay the amount in installment. Okay, we are paying the amount. Let us say I purchase a fridge of 52,000, but I am making the payment of 5,000 every month. So here also credit is raised. I got this advantage of making the payment in parts. So that is installment credit. Then advances. Some business organization get advance from their customers. It happens, no? Suppose you get a bulk order from your customer to manufacture something. Let us say I am a manufacturer of marker pens. I got an order from some big educational institution for 20,000 markers. So the total value is, let us say, 2 lakhs. I may ask 50,000 as advance. So again, this is also one of the source where the customers give advance to the supplier. Okay, so these are the sources of short-term finance. Okay, this way we have covered around 4-5 SAQs. Tomorrow we'll continue with the rest of the SAQs and VSAQs also. I'm ending the session here. Goodbye. Take care.